Michael Saylor. Why cash is trash and Bitcoin is king. When Michael Saylor called cash trash on live television, the financial establishment went silent. But what he said next changed everything. I'm watching Saylor pace his Washington, D.C. conference room, the same room where he convinced his board to bet $500 million on Bitcoin. Charts cover every wall. Inflation data, currency debasement graphs, Bitcoin adoption metrics. His intensity is unmistakable. People still think cash is safe, he says, stopping mid-stride. That's the most expensive lie in human history. The numbers behind him tell a devastating story. Since 1971, when Nixon severed the dollar's link to gold, cash has lost 96% of its purchasing power. What cost $1 in 1971 costs $7.25 today, and that's using the government's conservative inflation calculations. When I was a kid, my grandmother would tell me to save my pennies. Saylor recalls, his voice softening for a moment. She lived through the Depression. She thought cash was security. She had no idea she was teaching me to get poorer. But what's truly striking is a mathematical precision with which Saylor dismantles the cash illusion. Let's do the math, he says, turning to a whiteboard. The Federal Reserve targets 2% inflation annually. That sounds innocent, right? Wrong. At 2% inflation, your cash loses half its value every 35 years. He pauses, letting that sink in. But they're not hitting 2%. They're hitting 4%, 6%, sometimes 8%. At 6% inflation, your cash halves in value every 12 years. The recent data is even more alarming. In 2021 and 2022, real inflation peaked near 9%. Suddenly, cash was evaporating at a rate of 9% annually. $1 million became $910,000 in purchasing power in just 1 year. This isn't theory, Saylor emphasizes, his voice rising. This is theft. Legal, systematic theft of your life's work. You haven't seen Michael Saylor's most damaging revelation about cash yet. He pulls up a chart showing the S&P 500 versus cash since 1980. The divergence is shocking. While stocks return 10% annually, cash returned virtually nothing after inflation. $1 invested in the stock market in 1980 is worth $75 today. Saylor explains. $1 kept in cash is worth $1. Except that dollar now buys what 25 cents bought in 1980. The mathematics become even more brutal when he factors in opportunity cost. It's not just that cash loses purchasing power, he continues. It's that while your cash is dying, productive assets are compounding wealth. This is exactly where Michael Saylor's worldview crystallized. In early 2020, MicroStrategy was sitting on nearly $500 million in cash. Traditional wisdom said hold it in treasury bills, maybe some bonds. Saylor saw something different. I realized we were slowly going bankrupt, he recalls, returning to the seat. Not operationally, our software business was strong. Monetarily, we were holding a depreciating asset while our competitors who owned real estate, stocks, and other properties were gaining purchasing power. The turning point came during a board meeting that March. Saylor presented projections showing how their cash position would erode over time. I showed them what $500 million in cash would be worth in real terms after 5 years of 4% inflation. He says, his voice intense. $410 million. We lose $90 million just by being conservative. But what's truly striking is how Saylor discovered Bitcoin's superior monetary properties. I started studying money, he explains, gesturing to a bookshelf filled with monetary theory texts. Not finance, not economics, money itself. What makes money good money? His research led him to 4 fundamental monetary properties: scarcity, durability, portability, and divisibility. Gold was humanity's best money for 5,000 years because it had these properties, Saylor notes. But it failed the modern economy tests. The breakthrough came when Saylor realized Bitcoin perfected these properties digitally. Bitcoin is scarcer than gold. Only 21 million will ever exist. It's more durable than gold. It can't rust or decay. It's more portable than anything. You can send it anywhere instantly. And it's perfectly divisible. Wait a second. Don't miss this detail. about Bitcoin's discovery. When I first studied Bitcoin's code, Saylor admits, I was looking for flaws. I was a skeptic. I thought all digital currencies were just government experiments or speculative bubbles. But the mathematics changed his mind. Bitcoin's supply schedule is written in immutable code. No Federal Reserve can change it. No politician can vote to print more. No emergency can justify inflation. It's the hardest money ever created. The comparison to cash becomes devastating when viewed through this lens. While cash supply can expand infinitely at the whim of central bankers, Bitcoin supply is capped mathematically forever. In 2020, the Fed printed $3 trillion in a matter of months, Saylor recounts. They increased the money supply by 40% in 1 year. Imagine if someone could create 40% more Bitcoin overnight. It would be worthless immediately. Hard to believe, but that's exactly what happens to cash every time there's a crisis. 2008 financial crisis. They printed trillions. COVID pandemic. They printed trillions. Next crisis, they'll print trillions more, Saylor predicts. Every crisis is an excuse to devalue your cash holdings. Everything so far was leading to Saylor's defining moment. August 11, 2020. MicroStrategy announced its first Bitcoin purchase, $250 million. The financial media exploded. Analysts questioned Saylor's sanity. Stock price volatility spiked. That morning, I couldn't eat breakfast, Saylor admits, a rare moment of vulnerability. I was betting my company's treasury on my understanding of monetary physics. If I was wrong about Bitcoin, if I was wrong about cash. He doesn't need to finish the thought. The implications were career-ending, but the phone call that changed everything came 3 days later. Warren Buffett's lieutenant, Charlie Munger, called personally. Saylor expected criticism. Instead, he got a question. How did you figure out so fast? Charlie understood. Saylor reflects. He'd watched Berkshire's cash position get destroyed by inflation for years. He knew cash was a melting ice cube, but he hadn't seen Bitcoin as a solution. But what's truly striking is how quickly other CEOs followed Saylor's lead. Tesla bought $1.5 billion. Block, formerly Square, added Bitcoin to its balance sheet. MicroStrategy kept buying, accumulating over 190,000 Bitcoin. Each purchase validated Saylor's thesis. We weren't just buying Bitcoin, Saylor explains. We were escaping the cash system. We were protecting our shareholders from monetary debasement. The results speak for themselves. While companies holding cash watched their purchasing power erode, MicroStrategy's Bitcoin treasury gained billions in value. Not just nominal gains, real purchasing power gains. Everything so far was preparation for Saylor's complete monetary philosophy. Here's what people still don't understand. Saylor says, standing again, his energy building. This isn't about Bitcoin versus the dollar. This is about hard money versus soft money. Scarcity versus abundance. Mathematics versus politics. He walks to a chart showing currency failures throughout history. The pattern is identical. Every fiat currency eventually fails when governments can't resist the temptation to print. The Romans debased their currency. The Spanish inflated away their empire with New World gold. Weimar Germany, Zimbabwe, Venezuela, Turkey, the pattern never changes. But there was one detail that made Bitcoin different from every previous hard money. Gold could be confiscated. Saylor notes, pointing to FDR's 1933 gold seizure. Real estate can be taxed into oblivion. Art can be stolen. Stocks can be diluted. But Bitcoin with proper custody is truly sovereign. The mathematical elegance excites him. If you hold your own private keys, if you understand self-custody, no government can confiscate your Bitcoin. No central bank can inflate away. No politician can vote to take it. This is when Saylor's voice takes on almost evangelical tone. For the first time in human history, we have absolutely scarce, perfectly portable, completely sovereign money. You haven't seen Michael Saylor's boldest prediction yet. Cash will go to zero, he states with absolute conviction. Not literally zero, but its purchasing power will approach zero over time. It's mathematically inevitable. The timeline shocks even Bitcoin advocates. I give the dollar maybe 10 years before its debasement becomes undeniably obvious to everyone. Smart money is moving to hard assets now. Dumb money will follow later at higher prices. Saylor pulls up adoption curves comparing Bitcoin to other transformative technologies. Bitcoin adoption is tracking ahead of internet adoption in the 1990s. We're still in the early phases. The implications stagger. If Bitcoin follows internet-like adoption, its value could increase 100x or more from current levels as it becomes a global reserve asset. When central banks start buying Bitcoin as reserves, when sovereign wealth funds allocate to Bitcoin, when it becomes clear that Bitcoin is digital gold. Saylor pauses dramatically. Cash becomes obviously obsolete. Wait a second. Don't miss this crucial insight about timing. People always ask me about volatility. Saylor acknowledges. Yes, Bitcoin is volatile, but cash has hidden volatility. It's constantly losing value. You just don't see it daily. He shows a chart comparing Bitcoin's 4-year returns to cash's purchasing power over 4-year periods. Bitcoin might drop 50% in a year, but it gains 100% over 4 years. Cash might feel stable day to day, but it loses 20 to 30% purchasing power over 4 years. The key insight: time horizon changes everything. If you need money next month, hold cash. If you're saving for the next decade, holding cash is financial suicide. But what's truly striking is Saylor's personal commitment to this philosophy. I converted my entire personal net worth to Bitcoin, he reveals. My house, my cars, my entire liquid net worth. I practice what I preach. The decision wasn't emotional. It was mathematical. Every dollar I hold in cash depreciates. Every Satoshi I hold appreciates in purchasing power over time. The choice became obvious. Everything so far was building to Saylor's final argument. This isn't about getting rich quick, he emphasizes, his tone becoming serious. This is about preserving wealth across generations. It's about economic freedom. It's about opting out of a monetary system designed to steal your purchasing power. The historical perspective reinforces his point. Our great-grandparents could save in gold. That option was taken away. Our grandparents could save in bonds that beat inflation. That option was taken away. Cash savings accounts that beat inflation? Gone. When he turned to face me directly, the conviction in his voice was absolute. Bitcoin gives us back that option. For the first time in 50 years, ordinary people can save in an asset that can't be debased, can't be confiscated, can't be inflated away. The mathematics support his optimism. Bitcoin's 4-year compound annual growth rate exceeds 50%. Even with volatility, even with bear markets, the long-term trajectory remains up and to the right. Cash is trash because it's designed to be trash, Saylor concludes. The Federal Reserve explicitly targets 2% annual debasement. They're telling you they plan to steal 2% of your purchasing power every year, forever. Bitcoin is king because it's designed to be king. Absolutely scarce, mathematically pure, politically neutral. It's the hardest money ever created, and the world is slowly figuring that out. Everyone thought Michael Saylor was crazy when he called cash trash, but the real story was simpler. He was the first CEO brave enough to speak mathematical truth in a world built on monetary lies. The choice, as he puts it, is binary. Hold trash or hold treasure. The math doesn't lie.